Nebius Group NBIS Beginner's Guide. Imagine a company that builds and rents out giant warehouses full of AI computers, the kind that train and run the models behind every chatbot and image generator you have ever used. That is Nebius Group, ticker NBS. Today we are going to walk through what this company actually does as a business, not whether the stock is a good buy. This is educational only. So, what does NBS actually do? Nebius is what people in the industry call an AI-native hyperscaler. A hyperscaler, that just means a company that runs massive data centers and rents out computing power over the internet. The famous ones are Amazon, Microsoft Azure, and Google Cloud. Nebius is a much younger and smaller version of that idea, but it is built from day one specifically for artificial intelligence work, not general business computing. The core business is called Nebius AI, and it accounts for about 98% of revenue. In the first quarter of 2026, this single business pulled in $390 million, up more than 8 times from a year earlier. What Nebius sells here is a full-stack AI cloud. Let me unpack that. Full-stack means they handle every layer of what an AI customer needs. At the bottom is bare metal, raw access to powerful chips called GPUs, which are graphics processing units, basically the chips that handle the heavy math behind AI. Above that is multi-tenant cloud, where several customers share the same hardware safely. Above that sits something Nebius calls the token factory, which is just an easy way for customers to run AI models and pay only for the words, or tokens, the model produces. And on top of all of that, they offer agentic AI tools, which means software that can take actions on its own, not just answer questions. Their flagship platform is called Aster, currently on version 3.5. The rest of the company, only about 2% of revenue, is a grab bag of side projects. There is Ride, which works on self-driving delivery robots. There is 1010, an education business that retrains people for tech jobs. And Nebius also owns equity stakes, meaning small ownership pieces, in 2 other companies, ClickHouse and Toloka. The plan is to find partners for the side projects so the company can focus its full attention on the AI cloud, which is where all the growth is. So, who does NBS compete with, and how does it win? Nebius has what analysts call a narrow moat. A moat, that is just the competitive advantage that keeps rivals from catching up. Narrow means it is real but not deep or guaranteed. Let me explain the pieces. First, Nebius is vertically integrated. That is a fancy way of saying they own and control most of the chain that delivers AI computing. They have locked in more than 75% of the electricity they need under long-term contracts, which matters a lot because AI data centers eat enormous amounts of power. They built their own software control layer, Aster, which manages everything inside the data center. And they assemble systems all the way down to the chip and rack level themselves. On top of that, they have bought 3 smaller companies, Tavily, Eigen AI, and Clarify, to deepen the software they offer above the raw computing. Second, Nebius has a very tight relationship with NVIDIA, the company that makes the chips at the center of the AI boom. NVIDIA has invested $2 billion of its own money directly into Nebius and has given them what is called exemplar cloud status across multiple generations of chips. Exemplar cloud, think of it as a stamp of approval from NVIDIA that says this cloud provider is one of the best places to run our latest hardware. Very few companies in the world have that designation. But there are real counterweights. Nebius depends on a single chip supplier, NVIDIA, which is the same vulnerability that competitor CoreWeave has. They also depend heavily on a small number of huge customers like Meta and Microsoft. And at the most basic layer of their business, renting out raw GPU hours, the service can start to look like a commodity, meaning customers might shop on price alone. They are also spending enormous sums to grow, somewhere between $20 billion and $25 billion in 2026 alone. That is a lot of capital to put at risk. What are the key drivers for the business over the past 5 years? 3 things have driven the growth story. The first is the Yandex spinout. Nebius used to be part of Yandex, the Russian internet company. In late 2024, the company was separated, given $2 billion in starting cash, and moved to Amsterdam, listed on the Nasdaq exchange in the US. That clean break let it operate as a pure-play AI cloud company, free of the geopolitical baggage. The second driver was landing anchor customers, the big early names whose business gave Nebius credibility with everyone else. Microsoft signed a contract that runs through the end of 2026. Meta, the parent of Facebook and Instagram, became another major customer, with the first contract fully delivered in the first quarter of 2026. Meta then signed a much larger deal worth up to $27 billion, with $12 billion guaranteed and $15 billion optional, that begins delivery in 2027. Those anchor wins let Nebius scale revenue from $51 million in the first quarter of 2025 to $399 million 1 year later, almost an eightfold jump. The customer base now ranges from those hyperscalers down to AI-native startups and enterprise users like Revelit, Sword Health, and a humanoid robotics company called 1X. The third driver is the deepening partnership with NVIDIA in 2026. Beyond the $2 billion equity investment, Nebius has line of sight to roughly 5 gigawatts, that is a unit of power, of GPU commitments by the end of 2030. They get early access to NVIDIA's newest chip family, called Vera Rubin, in the second half of 2026. To wrap up, so that is Nebius in one sentence. A young Amsterdam-based AI cloud company that rents out NVIDIA-powered computing capacity to hyperscalers and AI builders, with a narrow moat built on vertical integration and a tight NVIDIA partnership. As a learner, the things worth watching are how fast they bring new data center capacity online, how the Meta contract starts delivering in early 2027, and whether they can stay first in line for the next NVIDIA chip family. This has been educational only, not investment advice.